presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Mike in Southern California. Hey, Mike, what's going on?
Hey, Tom, nice to talk to you again. And I have to start out and first tell you, I love this trading room. This thing is great. This app, it works great. And getting all the information, you're like instantly there. No delay, nothing. That's
I know.
great.
I appreciate you growling problem with us.
Your channel is in my pocket all day long. It's wonderful.
Thank you, man.
again.
Thank you.
Now, Tom O'Brien.
Good afternoon, everybody. I'm Tommy O'Brien, coming to you live from TFNN. Thanks so much for tuning in. We got less than an hour left to go in the trading day, and as I come to you, S&P's at all-time highs, 7,023. We reached that high of 7,025 right at 3 p.m. S&P's up by 0.25%, and yeah, we clawed back from this morning. Powell announces last night the Fed, they have subpoenas. They're under criminal investigation. Nonetheless, market shakes it off, and we're higher from the open. You opened at about 69.70. You were at 69.50 overnight. And just like that, we're trading up in green again. NASDAQ 100, similar action. We're up by 0.25%, 26,007 points. And the NASDAQ 100, the Dow right now, up 0.1%, up 67 points at 49,793. And you get the Russell up 11 points or 0.4 at 2648. Bitcoin, as is the case. So you got gold's up 2 to 3%, silver's up 8% right now, Bitcoin's up 2% right now. Okay, you have the value of the dollar in the red by about 0.25%. We were at about 99 and change as of the end of Friday. This morning, you make it as low as 98.70. We're trading right now at 98.85. Okay, the dollar technically off 276 ticks. And yeah, let's jump over to metals. How about it? Gold up $111, up 2.5%. Now, you were up almost $140. $140 you were up at one point at that high of 46.40. Silver up $6. We hit 86.34. Silver's up 7.6%. Now, you can see, folks, that on a day like this, where there's a flight to safety, you have the Federal Reserve, okay, you got some Republican outcry. We'll talk about whether it's PIMCO, PGIM, talking about the risks that this presents to actually higher interest rates, right? Silver's up 8%, Bitcoin's up 2%, gold's up 3%. Silver is just moving magnificently. You do have a lot of volume, okay? But they're all hard assets. If you're just worried about the dollar or the assault on the Fed, there's no reason silver should be up 8%. Now, they're buying it. That's why. Supply and demand. But no reason why silver should be up 8% and gold's up 3%. Okay? This instrument, this asset has knocked around violently recently. And, you know, I think we're getting a little lofty right now. The volume's encouraging. Okay? But, boy, when you get silver moving 8%, when gold's moving 2 or 3, what do you think is going to happen on the downside when you get pullback? Same exact thing. Gold, as I mentioned, up 2.4%. Platinum up 2.7% right now, and you jump to copper up 2%. So be careful in silver, and we're going to talk some silver stocks in a moment. We'll take a look at Hecla for our men double broad in the den. So let's jump around for a moment, okay? Now, first, of course, the actual act itself. I mentioned in the top of the update there, you have whether it's Tom Tillis, he's on the banking committee, okay, who is not running for re-election. So maybe he's going to stand a little bit more tall. Vowed quickly to oppose any nominee to the Fed until the matter is resolved. Okay, and this headline's talking about that jeopardizing the agenda. Boy, if this starts to put in question the next Fed chair, okay, maybe it gets squashed quicker than we think. Because that was the news we were supposed to get, right? The next Fed chair, not a criminal investigation of Powell. And you can disagree with the rates he has, folks, but like I talked about this morning, to actually threaten to put him in jail for a criminal investigation on the allegation of perjury, that he's out there lying to Congress and perjuring himself because he wants to hide how much money he's going to spend on the Federal Reserve building. It's not his building. It's not his money. It's the Federal Reserve building, that he's going to go perjure himself for that. And you add in the context, of course, okay, that the Federal Reserve renovation, they started that project in 2022. Okay, they broke ground. They didn't start the cost associated, right? They broke ground in 2022. It's not going to be done until 2027. We've never been through the type of cost increases from the plan started 2021, 20, whatever it is, right, through that time. So, this could jeopardize other stuff going on, and we'll see how far they push it. But yes, this could be a mess. And then you jump into the players in the bond market, okay? And shouldn't be surprising. If you're in the market, this is what you know is going to happen, okay? There is a risk that Trump's Fed fight will drive rates higher. They want them lower, okay? But they don't get to control what people are willing to accept for an interest rate over a 10-year basis if the president is now deciding when we cut and when we raise rates, and if he doesn't like what the Federal Reserve Chair is doing. And this is the guy that he put in there. Imagine if it's not the guy he put in. It's his chosen man from a prior term, okay, that he disagrees with tremendously. But to threaten to put him in jail, like somehow he deserves that because he doesn't want to cut rates when the unemployment rate is at 4.4%, that should scare the market, and it is. Okay, this is not like he's torpedoing a president and the unemployment rate is 8% and he stick it to him. You can make the case, but he can also make the case. You can make very reasonable cases on both sides of the equation, which is why it's so hard to tell where they're going to be, and which is why the bond market has been magnificently wrong on many occasions going back the last couple of years. But yeah, the market's going to be very skittish around the Fed as a source of instability. And what's that going to do? Instability. Unknowns. It's going to drive up yields, folks. That's what an unknown does. That's what a variable does. So we'll see where we go. Today, a slight reaction in yields, a slight reaction in the dollar, and the market shakes it off. Not the banks, though. And then you jump over to Capital One, the credit card. So 10% credit card fees for a year. People need access to capital, folks, and banks are not going to be lending them capital if you got unsecured credit at 10% for people who need credit card debt, because that's not a winning recipe, especially not compared to some of the risk-free returns or collateralized loans. You can get collateralized loans, okay, for investment properties. You can get a collateralized loan and give somebody, where you're only making them pay, you're getting 8% on a collateralized, imagine this, right? 8%, 8.5% for an investment property right now. It's still collateralized. They're charging you 8.5%. I mean, a mortgage rate is 6%. So an investment property, you're going to pay a premium, whatever that is, okay? And now imagine that you're comparing that investment to then a credit card at 10%, which is just so much riskier for the banks. And unfortunately, that's going to be a problem for people who need access, because the banks are not going to provide that access to credit when it's an unsecured line and they can't charge you more than 10%. Capital One, down by 6.8. You're seeing that hit JP Morgan. Clawing back some of the losses, but off 1.8. All right, folks, S&P's record, 7,020. You talk about it, man. You got the Dow right now, right near records, 49,778. Stay tuned, folks. We're coming back with our man, Steve Rhodes.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We got the S&Ps right near records right now, 7,019. And as we do each and every Monday at 3:15 p.m. Eastern Time, folks, we're going to jump over to our man, Steve Rhodes. You can listen to Steve's outstanding program, folks, every market day, 11 a.m. Eastern Time, The Trader's Edge. And check out right on the front page of TFNN.com, folks, Mastering Probability. You hit that banner. You can come on over to the page. You subscribe. It's $149 a month, folks. If you want to sign up for 6 months, you can save $199 or 22%. A year, you save $593 or 33%. They all come with a 30-day money-back guarantee. It's always a great time, folks. We got a little market action. Steve Rhodes, good afternoon. How you doing?
I'm doing good, Tommy. Good to hear your voice. How are you?
Good to hear your voice as well, man. I know you were battling a little cold. You're back. Hey, did you catch out any of that NFL action this weekend? How about it, man?
Yeah, for sure. I sort of footballed out, you know, because it's going to be, I mean, great football games, and don't misunderstand, but, you know, when you're under the weather, which I was, but you know, looking forward to tonight's game, really looking forward to the final, to the Miami, Indiana game, which is going to be just down the street from me. So great football for sure. I wish the Tampa Bay Bucks were in it, and, but it is what it is. So what's really interesting.
Indiana team, Miami too. I was rooting for Ole Miss, man. There's a lot of people, but boy, quite a game they had. And that Indiana team, man, that whole deal. The coach Signetti and the quarterback from Miami. There's so many cool storylines going on in sports right now. Pretty amazing. That kid, it's inspirational stuff, man. That kid, his family, all of it for sure. So, what do you think about the market, man? We got action in a lot of pockets right now.
We do. And so, you know, today's presentation, actually, a good conversation you had on interest rates, so I'll touch on that, too. Nice. And I wasn't really sure what I was going to do today, but we had a caller someone had written in, wanted me to take a look at Raytheon. I took a look at Raytheon. They were considering selling Raytheon, and so it actually gave me kind of a theme for today's show. So, and that theme is, the first thing I did was took a look at the global conflict and unrest that is in the world today. So this is I used AI to be able to generate this, and it shows the ongoing wars, major protests, political unrest. Basically, what it's telling us is we have a lack of confidence in government. Just listening to your opening conversation about what's going on with Powell and so forth, again, a lack of confidence in government. This is an organization, the Organization for Economic Cooperation and Development. They produce a chart here that tracks, if you will, tracks the the confidence in government. We can see it's been, pretty much going straight downhill since 2007. Gallup. So I don't use just one source. So I went to also Gallup to see what kind of information that they had, and they show basically the same kind of thing: a lack of trust in government. Now, and most people would agree with that. So that's the underlying principle here that really leads to a lot of what it is that we're looking at. As an example, when investors lose faith in government, they typically turn to private or physical assets. So here is the yearly chart for all the major U.S. indices, and then the major international indices as well. And each of these indices closed above. I have both the 2024 and 2025 highs marked here. And just as an underlying statement that I want to be able to share with folks is when you begin trading above last year's high, I don't care what instrument it is, it's in a bullish mode out there. So that's important to understand. Here, we have across the globe, not just in the U.S. or anything, across the globe, people have lost confidence in governments. Where do people put their money? We're seeing it right here. So whether you're in Germany and you're and you trade the DAX, all-time highs. We're above last year's high. The same thing is true with regard to the FTSE. That's what's going on internationally. So the point here is there is not any global flow of capital coming to any one place. This is investors are saying, I want companies. I want to have a physical type asset out there. If we take a look at the sectors inside the S&P 500, those that closed above the 2024 highs. Out here you had the XLK, the XLF, the XLC, the industrials and the utilities out there. And that's where folks had confidence in 2025. Watch the highs of 2025. If we start trading above those areas, which we are, for example, in the SPYs right now, watch these sectors out there. And right now, these are the sectors where, if you take XLY, we're already trading new all-time highs out there. If we take a look at physical assets, you were talking about gold and silver and copper. Those are the three assets when we take a look at commodities, whether we take a look at light sweet crude, natural gas, wheat, soybeans, corn, coffee, all the kind of stuff that we use each day out here. It was gold, silver, and copper that, and we're trading above those highs as well right now. So that trade is going to continue. If we take a look at gold's at new all-time highs in every single major currency out there. Now, I wouldn't consider the Russian ruble a major currency. I've got that in the lower left-hand corner, but I track that as well. If we take a look at gold in all of the Middle Eastern countries, we're mostly at new all-time highs out there. So certainly a global rally. But again, people are focusing their assets on physical things, companies, commodities. This is a chart that I put together. This was kind of inspired by the caller, the person who wrote in that asked me to take a look at Raytheon. So I said, why don't I take a look at kind of a war index set of charts out there? Northrop Grumman, Lockheed Martin, Textron, all of these that I've got out here. And what we can see when we take a look at how they're, again, these are annual charts that we're taking a look at out there. GE already traded above last year's high. L3 Harris traded above last year's high out here. This is an indication that those are in breakout modes. They're telling us that they want higher price out there. During periods of war, this is where I tie this in together now with your conversation about interest rates. So here I went back and took a look at during periods of war, World War I, World War II, the Korean War, and the Vietnam War. Interest rates rise during war periods of time. We've got charts that are in the so-called war index that are breaking out. We've got folks that have lack of trust in government, so they're buying assets. Doesn't matter whether it's their own index in their own country or the U.S. out here. If we take a look at the Federal Reserve cuts that have transpired since September 18, 2024, with the exception of the last one from December 10th, each of those rate cuts have actually led to higher rates. Your point specifically, I don't care what you go ahead and try to charge. I don't care how much you want to lower rates. It's what is the retail public going to do? This is the chart here where we take a look at the 10-year note. This is the retail public out there. So you're right. Mr. and Mrs. Market may think differently with regard to rates out there. So a lot to kind of encompass out there, but I think what this is telling us is that I would expect stock market to continue to rise. I'd expect gold and silver to continue to rise, the trade that's been in, and as well as those war-oriented charts that we're taking a look at.
Pretty cool charts. That Vietnam War, those rates, we all know, man, that was quite an exceptional. Yeah, right there, man. And it continued right into that. I was born in 1980, Steve. And so I got some savings bonds in 1980, and I think they were earning, man. I cashed them in when I was like 35, like 2014. And they were earning, they had coupon rates of like 14%, like 15% savings bonds. 1980, I was like peak inflation, baby, at the time. Pretty remarkable, man. And yeah, if we could all only set the own interest rate that we borrow money, right? We'll see how the market, but boy, I love those charts in all different countries, countries, and we got quite a run, man, for sure. Steve, great information as always. You sound great.
Perfect. I just summarize like this. Folks should be taking a look at whatever they're investing in, see if you're trading above last year's high or below last year's low, because that would obviously, suggest otherwise.
Folks, check it out, The Trader's Edge, 11 a.m. Eastern Time tomorrow, and check out that Mastering Probability. You got many great webinars, as well as Steve's morning, afternoon updates. Steve, great stuff as always, man. Look forward to the program tomorrow. Thanks, Steve. We'll be right back, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. We got the S&Ps up by 12 points right now. NASDAQ up by 47. And yeah, I was just even going back trying to figure it out myself. And, I was born at literally. So check this out, folks. Okay? Now, this is the Federal Reserve Bank of St. Louis. And this is the 30-year. And I think that's what I got. I think that my family, they'd buy me, I got to find them. I mean, I had the certificates back then, and what happened was it had been over 30 years, and so I was just getting an interest rate on top of that, but I locked in an absurd percentage, and so what happened is that they probably had to put up a very low face value as opposed to what those would be worth in X amount of years, right? But check this out. This is the yield, okay? This is a yield table of U.S. Treasury securities at 30-year maturity, quoted on an investment basis. This gives you an idea where yields were, okay? And look where I was born, man. Now, and Steve just went over, great chart, coming out of the Vietnam War, right? 7.7% in the late 70s. Okay, this is your 30-year we're looking at again. It's the 30-year. It keeps creeping higher. It's at 9% by 79. You come into 8, watch this acceleration. You come into 1980, you're at 10%, and then you go to 11 in February, you're at 11.6. This is week by week. Look at the week by week 30-year. Look at how this thing ratchets up. And you hit 12.6 February 22nd, February 29th of 1980, you're at 12.5. I was born March 20th of 1980. So everyone was buying me T-bonds at a rate for 30 years. This is your interest rate until the year 2010. This is your interest rate until the year 2010. It's remarkable to see, but that's what happened. And then they go down, they get back up there again in 1981, right? 12.99. Wow, look at you got all the way up to 13.9 in May of 81, 14.4. This is a 30-year again. And then we ebb and flow, and we reach our peak, it looks like, at 15%. Hey, nonetheless, remarkable numbers, and yeah. We'll see what happens. But right now, you get the 30-year, 5 ticks lower. You jump back to that 10-year. And we're negative by about 2 ticks, and we jump back to that dollar right now, down about 27 pennies. All right, jump over to some of the others. Let's take a look at the volume. Excuse me, AXP. I know I was like, there it is. So American Express off by 4.2% today. Look at the run these things have been on. That was a nice acceleration. American Express, you got a high of 326 early in the year. Look how you come back, you test it on October, and boom, you accelerate higher on earnings in October. Hey, maybe you come back and you test 325. Something to keep your eye on for sure. We got some selling right there at the highs. Look at that. All right, the week of December 15th, you rip lower on volume. All right, we got a question in the Tiger's Den. Taking a look at Hecla. So the question is, the target's 26 from like 20 years ago. Okay, there it is, right? Excuse me. Now, something to consider, okay, is that even that tail, and you're going back to April of 1987, it's a tail that we were there for less than a month. You didn't close it. Even in 1987, we didn't get a close above 23. So right now we're hitting a price tag of almost 25. The high from 1987 is 26, and that's a tail high. It's not like we have any type of real. Now, yes, you can ring that bell. For sure you can. Why not if we're up 9% today? But you have gold up 2 to 3%, right? Bitcoin right now is up 1.5%. So if this is just a flight to quality for assets, there's a squeeze in silver right now. But there's no reason to be buying an asset that's up 8% today if you're just looking to, as Steve mentions, right? You have a little bit of distrust of what's going on for whatever reason. Natural that could be happening. You don't need to be buying an asset that you're paying 8% more today than you were yesterday when there's assets out there like gold, platinum, copper, Bitcoin, whatever, that are not trading at 8%. So that's going to reverberate on the other side. And, on the volume perspective, though, there's no selling. Okay. Now, the one thing that's a little worrisome is you got all this volume at about $20. So maybe you got to pull back to 20 or 24. That's a 20% pullback. Okay. You're going to get stopped out of these at some point unless you get the tick high. And so I would really start to put a line in the sand, man. If you got into this thing at $7, did you get into this earlier this year in August or something like that? Probably, right? Because it was under that price level. Were you thinking you'd get out near 25 by January? At a minimum, yeah, sell your free shares. The bummer of it is that even selling your free shares right now, taking almost like a third or a quarter of your position off, you still got a lot riding. And this first pullback, folks, on a chart like Hecla, you could be back to $17 like nothing, okay? That's 12 days of trading. 1804 was the low coming into New Year's. You back it up on a daily. That was options expiration December 19th. Okay, maybe that's where you test. $20 seems to be some action there. That's the worrisome part about this. It's really hard, folks, to catch a run all the way up unless your plan's just to hold it. But if you're thinking about selling at 26 and you're at 25 right now, you could be back to $18 in a heartbeat, man. Okay? Hecla's up almost 10% today. You're up $2 today, and meanwhile, in May, that was 50% of the equity. Now, we've come a long way from May, okay? But taking a look at silver in the same way, let's take a look at the volume. It's some big-time volume, but you're breaking above this December 29th bar, okay? We ripped lower 2 weeks ago. That's 2 weeks ago. We were at $18 in Hecla 2 weeks ago, and we're breaking above the highs. Yeah. You got to set a stop. That would be my call, and I wouldn't give it a lot, You give it something like, if this run's real, how much room do you want to give it? You just went from $7. Realistically, we fill that gap. We get back in here. Okay, you break into this day of strength from January 6th. That's a price level, because you break below there, you're going to the bottom of that bar, and that's almost another 10%. $2 here, $2 there, right? It can go quick. We were at $18, January 2nd, $18, 10 days ago. All right, folks, we're coming right back. We'll talk some banks. We got bank earnings coming up this week as well. Come right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Welcome back, folks. S&P's up by 11 right now, and yeah, we jumped to some of those banks. So, of course, the credit card companies, Capital One, down by 6.7%. We're really pulling back right to this level that we had the one-to-one. Check this one out on Capital One. You accelerate from August of 2024. You accelerate higher. You almost come back and test that area, and then you do it again, and we're pulling back to test that area. This is an important area for Capital One. You break below this area, 200. That's why I love just, you pick a level, you pick a stop, and you tell yourself, if you're going to hold this thing through the area we're at right now on Capital One, this is a visual area of ice. Okay, it's an area of resistance that now could turn into a support, and if it does not turn into support, you're going to the bottom side of this, which is the same thing that this was resistance. Now it's support, etc. 200, 230. Basically, where we're trading right now, Capital One off 6.7%, JP Morgan down 1.5% right now. We don't really have any selling just yet. You do have some selling out there the week of December 15th. But check this out. Right? Check out that you traded lower that week of December 15th. Sometimes if you ever see a big week stick out on the charts, right, go into that week and see where that volume is on a shorter term basis. Doesn't change the context. It's still a weekly bar. It's still there. But look at where the volume actually was that week, right? That was your week, December 15th, 16th, 17th, 18th. And then what happened when all the volume came in and options expiration? You got to trade higher. So we have a lot of volume to the upside in JP Morgan. Jump over to Wells Fargo. This thing's been on quite a tear. You got a 1 to 1.618 expansion as they can expand their asset base. Now, same exact thing. Check it out. That was a big week options expiration in December, as is usually the case. It was triple witching. You had the daily, weekly, monthly, quarterly, quad witching probably, right? You had the daily, weekly, monthly, and quarterly, with it being December. Options expiration, there's the 19th. You trade higher in Wells Fargo as well. Now we talk some of the big stocks. Jump over to NVIDIA, barely in the green today. You jump over to Google. So Apple, they picked Gemini to run the AI-powered Siri coming this year. So Google's up by 0.8%. That's an all-time high to 334. You talk about a run. If the question was what equity to buy at the April lows, Google was definitely one of them. From 142 to 331, we jump over to Apple shares, up by 0.6%. Now you take a look at Apple, okay? That's a different story. Look at those two pronounced bars. We have not had any buying in Apple since the week of December 1st at the highs. Okay, you make that acceleration. Now, the good thing is Apple's got volume to the upside, And ideally, a nice setup would be you're looking for the bottom of this channel. Now, you back this up, this channel, you got to go back even further than that, huh? Yeah, pretty much from where we were, whether it was 2020, whether it was the low side on 2023, the highs of that channel, the high of 2020, 2021 coming into 2022. You touched that area in 2024, and you just touched that area again in December 2025. And see how many times you just bounce around. Nature of the markets. And right now, at least according to that channel, okay, Apple a little bit overvalued. You're at 260. You're up by 0.5%. But I am always looking to add to Apple right now. Their whole ecosystem I talked about during the holidays, quite a marketing achievement in terms of convincing me to buy a phone, a tablet, and a watch all the same day. Subsidized by Verizon. But nonetheless, they're Apple products, and they're getting, imagine, never before would I have, but the subsidies are back, man. They were competing at Christmas in a big way. Phone, tablet, watch, all of it. Apple up by 0.5%. Now, how about Walmart? So Walmart's getting added to S&P 100 something. Let's see. What are they getting added to here? And they're also in ChatGPT. They got a couple good stories. Walmart, that's an all-time high, up 3.2%. And look at the volume on the daily. That's how you like to accelerate to all-time highs. Check it out. You're breaking above the highs of December, and you're doing it with dramatic volume. I mean, look at this. Even on a weekly basis, it's Monday. You're doing as much volume today as we pushed to all-time highs, almost as much volume as you did over the 4 days during New Year's week. Whew. That's how you break highs, man. Let's put Walmart on the monthly. Again, when you look at the volume, it's a nice setup, man. Even since July, you've had higher volume numbers. You had a little bit of selling in August, then you do 327 million in September, 348 million in October, 391 million in November, and 442 million, continuing to trade at all-time highs. Now, I don't know if we're going to do it this month, but we're off to a good start. You're at 161 million right now. And what have we had? Only 6 trading days so far. Now we got a holiday coming up. I think we're closed on the 19th for MLK, if I'm correct. So we got 5 plus 5. You got 14 trading days left. We've had 6 days so far, and you're already at 161 million. But today's going to be a big day. Walmart up by 3.2%. We stay in retail. Target. Talk about a different chart, man. Target. That's your monthly volume. Boy, you know what I'd really like to see? You break through that resistance line, kind of where we correlate from the highs of 21 to the highs of 24 to the highs where we are right now. But on a monthly basis, not finding a lot of great signs of strength out there. Maybe in December during a holiday month. Put this on a weekly. Not exactly super encouraging. You had some okay volume during the holidays. Last week, though, on that acceleration higher in Target, you did 35 million shares. Christmas week, you did 34 million. You have to laugh. That was 3.5 days and nobody in the market. Last week's expansion, very light volume. Doesn't stick out too well. One of the best stocks out there, TJX. A little bit on the overvalued side right now, though. Negative 0.5% right now. That's your weekly. Let's take a look at the monthly on this one. It's a strong looking stock. I would just rather get it a little bit towards the bottom side of this channel line that it's been in for some time. You're pushing the upper boundary right now, but TJX down by 0.5%. And one of the other best equities out there when you talk about channels. Now this one, there you go. Okay. Now when I talk about these channels, folks, if you're unfamiliar, Bud Rolfs, he was the channel master. He was a host, newsletter writer at TFNN going back a decade ago. They don't always work all the time, but at least you have a trading plan, folks, okay? You're getting into this thing right now. Mickey D's, you're going back to a channel line 2015, man. Yeah, you're talking about more than 10 years. This channel began in October of 2015, okay? And right now, you're towards the bottom. You've just been chopping around the bottom side of that. The good thing is you get in, you're wrong, you set a stop. Because at least you have a plan. But Mickey D's. That's your monthly. We'll finish it up with McDonald's when we get back, folks. S&P's up by 12. We'll take a look at metals one more time as well. Coming back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks, and we are near that tick high right now. You're getting a little volume coming in as you would towards the end of the day with the S&Ps right now. And we're making a little run up by 0.25%, up 15 points to 7,020. NASDAQ 100. We hit a high of 26,020 earlier today. Now, in terms of all-time highs, that all-time high about 400 points away from October, 26,399. The Dow, we made highs last week. We're right up against that level. Yeah, we're only about 35 points away from that level right now. The Dow was at 49,212 at the lows of that candle. We're at 49,831 in the Russell right now. That's an all-time high on the Russell. So what do you got? Russell, all-time high. Dow, all-time high. S&P, all-time high. Gold, all-time high. Silver, all-time high. Now the Dow, right up against that level within about 30 points, but remarkable, man. We check in on metals, as I said. Silver, 85.15 right now. Gold contract up $105. We check back on currencies. The dollar right now at 98.19. Now, what's remarkable is, so we get bank earnings this week. You're going to hear from banks. We'll hear what they have to say about capped interest rates, etc. But yes, we get bank earnings this week, okay? And you're going to have JP Morgan, all right, Wells Fargo, Citi on Wednesday, Goldman Sachs, Morgan Stanley on Thursday as well. So we'll get to hear about some of these proposals. Now, talk about proposals. ExxonMobil, looks like Trump might be siding against, as they had talked about maybe Venezuela being uninvestable. And it seems like he's not happy with those types of terms. And they also stated, when asked when they pulled out last, the answer was the last time Trump was president because of his sanctions. They had to pull out. That's what happened. They couldn't do business there. They had to pull out. They had to cut and run. They had infrastructure there. That's gone. They had to bail. Very difficult to get back in. But Exxon right now down by 0.4%. And crude nearing $60. All right, folks. Thanks so much for tuning in, spending your afternoon right here with me. Have a great night, folks. Have a safe night. Appreciate you being here. Head on over to the front page at TFNN.com. Give our sponsor Direction a click if you don't mind. They're just a great supportive sponsor, folks. Give that a click, and we'll see you tomorrow morning.